Hello everyone, and welcome to the official NJAR project launch webinar. This is a project that's in partnership with 10K Research and Marketing out of Minneapolis. My name is David Arbit, and I am the research manager here at 10K Research. We are very excited to be launching this project where we will be reporting on all residential housing activity that occurs within the beautiful state of New Jersey. This will cover some of the reporting environments that we'll be providing to the New Jersey State Association, as well as to some local boards, well, I should say all local boards. And we'll also cover some of the applications that are related to this reporting project, some of the methodology considerations, and a few other exciting items today. So thanks for listening, and thanks for joining us. And without any further ado, we will jump right in. The reports that will be present and that will be released monthly are the Monthly Market Indicators Report. This is a statewide report. It includes all MLSs and local boards or associations. The other report that's a little more granular is, of course, the local market updates, or the LMUs. These are county by county or city by city reports that are also distributed and will highlight market information at the local level as opposed to the state level. There's also a quarterly skinny video that, of course, happens at a quarterly frequency, and that's not monthly. The video will highlight some of the high-level trends happening with buyer activity, seller activity, the number of active listings on the market, and home prices and things like that. And then there's fast stats, which we'll get into in a bit. Sort of the environment that houses all these things. Just briefly, in terms of access and delivery, the statewide monthly indicators report will live on the NJAR fast stats for everybody to access from the NJAR site. The county LMUs, the local market updates, those will also live on the NJAR fast stats site for everybody to access. Then the municipality local market updates will live on the NJAR fast stats, but they're only for members to access, and you have to have a secure login, of course. The local board and the MLS monthly indicators, these are sent on the 10th of each month, and if the 10th, of course, falls on a weekend or a holiday, you can expect it the following business day. We do ask that local boards and MLSs do not share or disseminate the data until one business day after receipt, just to make sure everything is smooth and everyone's on the same page. Just briefly, an overview of the Monthly Indicators Report. This is a 15-page report. It covers the entire state. It is broken down by key metrics. This is based on combined data from every single MLS, and it's split out by property type, by single-family, townhouse condo, and adult community. This is, of course, updated monthly and is branded for the New Jersey State Association of REALTORS. Similarly, but at a more local level, we have showcasing the United Association here. These are a similar 15-page report with regional data broken down by all the key metrics of pending sales, closed sales, new listings, days on market, inventory, so on and so forth. This is based on data from that particular MLS feed instead of aggregated up to the state level. This is more of a local report, and it is split by property type as well. This is updated monthly, and it's branded for each board or MLS. Where to access them? The monthly indicators is the statewide report that will live on the NJAR website, and the MLS and the local boards or associations, those reports are accessed through that particular MLS or board or association. For the local market updates, which are a little more granular, these are individual reports for 565 municipalities throughout the state and 21 counties. So there's both county reports and then on each city within each county. These are based on combined data from all MLS feeds split down by property type. They're updated monthly, and they are branded for the New Jersey State Association as well. For where to access these local market updates, each of the 21 counties and 565 cities are available on the NJAR website. I don't believe this is live quite yet, but there will be a link under the Research tab by Quick Links that will showcase these 10K Research reports, and that's the best way to access them. The other way to access them, of course, is within the FastStats environment. This is an intuitive interface for members to go where they can sort of click on a county or cities within the county that will immediately bring them to the local market updates. And as you see in the upper right, there's also a link to the statewide monthly indicators report. It's a real handy tool. You know, everybody thinks spatially and sort of geographically and where things are in relation to each other. So we found that our customers and the members locally in Minneapolis really love the way that you can click on a map and sort of immediately access the reports. For the FastStats product, what's available to the public? Well, the state reports are public and so are the county reports. But again, the municipality reports, the city-by-city jurisdiction, these will be behind the NJAR firewall, just to, of course, protect the value of the agent in the transaction and to ensure that members retain a competitive edge over non-members. The quarterly skinny video is a video for the entire state. It focuses on all the key metrics and the market trends. It's sort of a fun conversational piece that you can share through social media or through email or what have you. And it's a great way to keep consumers updated or potential leads updated as to recent market developments. This again, the video is of course based on data from all MLS feeds across the state, all 21, and it's updated quarterly, and it is branded for the State Association. We do have a version of it live here, so let's take a look. Hi, welcome to the New Jersey Skinny, brought to you by the New Jersey Association of REALTORS, where we dig into the most recent numbers from our market. This month, we are pleased to announce the launch of our statewide market reporting project. We will produce monthly indicators, monthly reports that break down key statistics from around the state. We'll also produce local market updates, one-page snapshots of local markets, both available to members. The reports feature data on single-family, townhouse condo, and adult community properties. Agents will now be able to assess buyer activity, seller activity, days on market, home prices, inventory levels, and more for the entire state, each county, and every municipality. The best part? This will all be available free of charge as a member benefit. Agents will also be able to better counsel home buyers and sellers and stay more informed on market trends in a fast-paced environment. From managing seller expectations regarding days on market to coaching buyers about area-specific price trends, these new tools will empower agents to better capture leads, grow their business, benchmark their performance, and stay on top of emerging patterns. Let's look at the data for the second quarter of 2013. Housing activity has been really shining so far this summer. Pending sales rose a significant 25.8% from last year to 28,142 contracts written. This measure of buyer demand remains above 2010, 2011, and 2012 levels. Consumers don't seem too bothered by higher mortgage rates, though many are monitoring rates for further changes. It's important to put the uptick in context. This remains one of the most affordable home buying environments in decades. Inventory levels are still thin and manageable. The number of homes for sale fell 17.1% since last year to 63,630 units. For sellers still sitting on the fence, it's important to understand that many who have listed are seeing multiple offers on well-presented listings. With less supply. We'll go ahead and stop it there, folks, but I think you get the idea that it's kind of a fun and informal market video that can keep people abreast to changes in the marketplace and just what's happening in terms of supply and demand and home prices. And we sort of talk a little bit about the why, the what's driving these trends, you know, interest rates and inventory levels and rising rents and some job growth and income growth and things like that. So it's a good way to stay in tune and stay connected. So moving away from the skinny, we're kind of back on these monthly reports now. They're the 15-page report for the entire state, broken down by key metrics, and we do want to take a look at this just to showcase exactly what's happening in the report. So I'm going to walk you guys through what's happening from the cover page all the way through the end, and we'll spend a little bit of time talking about them. This is the cover page for the statewide report. It does look similar to the local board and local MLS reports. And what you can see here is off to the left, we have a little bit of a synopsis, just to give context and set the scene. We'll sometimes talk about what's happening nationally and regionally and locally, and then we kind of dive into what's happening in terms of sales and prices for each of the segments, single family, townhouse, condo, and adult. You can see prices are up across the board, and so are sales, and then we kind of end with what to watch for and other things happening in the economy or on the political scene to sort of watch for. Moving over to the upper right here, you can see it's branded to the New Jersey state. Moving down, we have a little bit of a dashboard here. I think of this as really an instrument panel, like on your car. How fast is your car going? How fast is your engine spinning? How many RPMs? And what's your oil temp and things like that? How much gas is left in the tank? So this is a good way to get a quick view of what's happening in terms of different metrics and different indicators. And then, of course, we have the table of contents. And this, by the way, is live and clickable. So if someone wants to skip to a page, just go ahead and give that a click. Moving on to the overview, this is the single-family overview. You can see that there's a townhouse condo overview, and you'll also notice that there is an adult community overview. Let me just skip back to single-family here. I just want to go through some of these with you guys. Immediately, we can see that there's two columns. There's August 2012 compared to August 2013, and then there's year-to-date 2012 over to the right versus year-to-date 2013. And we, of course, show the year-over-year change that occurred between those two time periods. What do we see? Immediately, I can see new listings were up 6 1/10% from about 9,200 to about 9,750. That's a good thing. Seller activity is healthy. Pending sales and closed sales both up about 13.5% to 14.5%. Again, that's a positive. Buyer activity has been very strong recently, driven by a lot of motivating factors. The median sales price was up just about 4.5% to just under $350,000. That's up from $335,000 at this time last year. And then you can go over and kind of compare how the month of August stacked up to 2013 so far year to date. You can see that August, up 4.4% to 350, was stronger than all of 2013 year to date so far, which is up 3.6 to 320. And that's to be expected as we get into the summer months and we see a little bit of higher prices. Average sales price similar, but these two happen to match in terms of up 2.3 and up 2.3, both for the month and for the year-to-date period. Percent of list price received, this is a very interesting metric that compares the ratio of sales price to current list price. So if I'm listed at $200,000 and I accept an offer at $180,000, I have just received 90% of my list price. Similarly, if you scale that up to $300,000 and I accept an offer for $270,000, I've just accepted an offer for 90% of my list price. You can see that on average for the entire state, for single-family homes, don't forget, we're still on the single-family overview, sellers are actually receiving 96.5% of their current list price. Think of that as their asking price. And that is up about 1.5% from this time last year. So this metric is firming up nicely, and that's another encouraging sign of housing recovery. Another point that's consistent with this, rising prices, strong demand, higher percentages of list price received at the point of sale is, of course, that homes are selling more quickly in less time. This is one of those metrics that we'd like to see, continue its descent. It's decreasing from 96 days on market on average to 82 days on the market on average, and that's down about 14.5%. Again, that's encouraging. Sellers are finding that they have to be less patient in order to sell their home, and that's especially good for motivated sellers. The affordability index is a way that we measure the affordability of the housing stock. There are three components of our HAI, our Housing Affordability Index. They are the prevailing interest rate, the median family income, and the median sales price. So essentially it answers the question of how much house can the typical family afford given the price of that house, the income of that family, and what it would cost them to finance a loan. And of course, we do assume 20% down, which obviously not all families can do or individuals can do. But we had to pick a benchmark, and that's the benchmark we chose. So a higher number is better. What that 120 is actually telling us is that the median family income is 20% higher than the baseline necessary income needed to qualify for the median priced home under the current interest rate. It's a little bit of a technical indicator, but it is valuable. Homes for sale, inventory. The number of homes in active status, these things are all synonymous. So you can see that we went from 55,500 homes or active listings, homes for sale, in August 2012 down to 47,300 homes for sale here in August of 2013. That was just shy of a 15% decrease in inventory. This is something that's been going on for a while. If you actually look at the yellow bars in the spark line for single family, you'll see that despite some seasonality, you'll see that the trend is definitely headed down in terms of inventory. And that's something that we're seeing here in Minneapolis and in markets across the country from coast to coast and the Midwest down to the south. So this is something that is challenging for some buyers looking in certain areas and certain price brackets. But flip that on its side and you can sort of also say, okay, so buyers had about 15% fewer options from which to choose. You can also say that sellers had 15% less competition with which to contend. So there's, of course, two sides to every story and two sides to every coin. So that's important to, it's important to remember and to think about. Month supply of inventory. This is probably one of our favorite metrics around the office because it does such a good job of assessing the balance between supply and demand. So it doesn't just say the inventory or the supply of homes was down 15%. It doesn't just say closed sales were up 13.7%. It actually says, it says things about the ratio of that supply and demand. Think of it as a supply-demand ratio. By the way, just an FYI, this is the same metric as an absorption rate. Some people calculate it differently. Let me share our method. We take the current snapshot of inventory, which is that 47,300 homes in active status or for sale, and we then divide it out over the past 12 months of pending sales activity on average. And what we see here is at 8.8 months, the figure's a little bit high, but it's not excessively so, and you can definitely see it's headed in the right direction. From 12 months of supply down to 8.8 months of supply, that's a 26.7% reduction in the month supply of inventory figure, and that's a positive. That means that supply is coming back down and demand has been strong, and that's another encouraging sign. It answers the question of how long would it take us to completely sell off all the inventory on the market, assuming no seller activity or no new listing activity. So just to make the numbers really easy, if we had 10,000 active listings, 10,000 active homes on the market, and we were averaging 2,000 pending sales a month, well, that 10,000 at 2,000 a month would be 5 months of supply, or 10 divided by 2, which equals 5. So that's a way to think about it. The numbers, of course, never work out that evenly or that nicely, but it's a good example and a good way to think about it. So you can sort of do the same exercise for townhouse condo segment and also for the adult community submarket, and you can see, let's just bring our eyes down to month supply. The 4.3 month supply of inventory for adult communities does tell us that this segment of the market is technically in a seller's market or leaning strongly toward sellers. That has come down almost 45% from 7.7 months down to 4.3 months. So as a result, we should see prices firming up quite a bit. And sure enough, we see that we went from about 140,000 up to 160,000, which is about a 14% increase. So that's encouraging. And we see a 1% decrease in seller activity. I would say that's nothing to write home about. We can see about a 12.3 increase in closed sales and a 13.1% increase in pending sales. So every month this will be, of course, refreshed with new data as new information from the RETS feed comes to light. And it's really interesting to compare this, both the current month to the same month of the prior year, as well as the current year-to-date period to the year-to-date period of the previous year as well. So let's keep trucking along here. Here we get into each metric, and we kind of get into some more specifics about the metric and some of the more nuanced aspects of it. One of my favorite parts about this is that we give some context. We give historical context. You can see that in the trend line chart at the bottom left. It's called Historical New Listings by Month. And it's, of course, broken down by our segments, our single family, our townhouse condo, and our adult community submarkets or segments, as you will. Of course, there's the most single-family listing activity, and single-family also dominates most of the sales activity, but you can see other trend lines and you can see movement, and be watching for certain trend lines recovering or all trend lines recovering, and maybe you see some patterns of convergence and divergence, and these are good things to watch for as you're paging through these each month. Going up to the top, we can see that new listings in August for single-family homes, that's where we see our 9755, that's the figure. And at the bottom, under 2013, under the bar, we can see that was, again, a 6.1% increase. Townhouse condo for August up 3.5% in seller activity, and there's our minus 1% in new listing activity for adult communities. We can also do the same exercise with year-to-date. For some of the more quantitative folks out there, sometimes we lovingly refer to them as data junkies, we, of course, display the table of raw data. This can sometimes be overwhelming for some folks, while other folks absolutely demand it. So it's a good thing to show, and we're glad that it's included here. And that's where you can see some of the historical data going back a year, and that is valid. And we also have the 12-month average at the bottom, just to get a sense for how did August stack up to, compared to the past 12 months as a whole on average. Just paging along here, here's pending sales. Again, at the upper left, for the month of August, single-family pending sales were up about 14.5% to just under 6,000. Townhouse condo pending sales were up about 18% to 1906. Adult community pending sales were up 13.1% to 743, and so on and so forth. And you can do the same exercise for year-to-date. Closed sales again, median sales price. I'll just pause here for a second. We can see our single-family August median sales price was up to $350K. You should remember that from the overview page at the beginning. And then moving down the line, townhouse condo up 9.8%, adult communities up 13.9%. And of course, single-family homes are sort of leading the pack at $350K. Townhouse condos sitting at about $280,000, and adult communities bringing up the tail at $160,000 in terms of the median sales price of that property type. Again, you can see the data in the lower right, and you can also see the trend line. We have a saying here that the trend is your friend, and it is important to watch for the context and kind of where we've been, where we are, and you can start to think about where we might be going. And sometimes that's hard to deduce from the bar charts, and it's more readily available in the trend lines at the bottom. So we encourage folks to, of course, use both. The bar charts up top are a great snapshot of activity in terms of August of this year, August of last year, and August of the year prior for each of the property types. But you can also see that, hey, the single-family price trend line, the median price trend line in yellow at the bottom left, is just about as high as it's been in the past 3.5 years. So that's also proof positive of robust housing recovery. Here's your average sales price. Some folks like average, some folks like median. We do prefer the median because, well, I'll tell you this. Bill Gates walks into a bar. On average, everybody just became a billionaire. But the median income really only went from maybe $60,000 a year to $70,000 a year. The median sales price is much more insulated from activity occurring at either the far high end or the far low end, while the average sales price sort of sums up all the transacted prices and then divides out by the number of sales. So we do prefer the median for that reason. We talked about this briefly. Percent of list price received. You can see every single property type is heading up fairly dramatically. Single-family percent of list price received was up to 96.5%. That was a 1.4% increase. Townhouse condo up to 96.3%. So they're just about neck and neck. And then adult communities hanging out at 95.5%, up 1.7. So if you look at the trend line, all in the bottom left here, all of these segments are recovering in terms of this metric, looking through this lens of the ratio of sales price to current list price. And again, that's very positive. That's very encouraging. It's another supporting data point that sort of confirms market recovery. And this is what we like to see, and this is common across the country, and it's nice to see here as well. Days on market, we talked about this briefly as well. Almost all of these trend lines are heading down. You can also see that in the bar charts. it's kind of funny. They're almost all at that 82 or 83 range. Single-family homes, in terms of days on market, down 14.6% to 82 days. Townhouse condo properties down 19.4% to 83 days. Adult community properties down 26.1% to 82 days. So everything's sort of selling in a pretty similar time frame. And this is, of course, the average number of days between when a property is listed and when an offer is accepted in a given month. You can see the data off to the right in the table at the bottom right, and again, you can see the historical trend lines. And sure enough, homes are selling just about as fast as they have in the past 3.5 years. And that is another positive data point. Here's our HAD Housing Affordability Index. You can see that as prices have risen and as prices firm up, affordability does decline a little bit, but especially with the adult community and the townhouse condo trend lines you see at the bottom, these indicators are still in a good place, and it is encouraging to see them above 100. As you go to places like Manhattan and San Francisco and LA and parts of Miami and downtown Chicago and other places, you'll see that it's more difficult for the average family to afford a home when prices are as high as they are in some of those areas. And it's nice to see that New Jersey as a whole is a fairly affordable state in terms of housing stock, despite the segment. Of course, there's variation by market segment, and this again varies by location, but this is another encouraging data point. Even though interest rates are up slightly, this remains one of the most affordable environments in decades, so that's important to remember. Here's our inventory levels. Of course, the state is majority single family, so we see 47,300 active listings that are single family homes as of the end of August. That figure's down about 15%. Townhouse condo, there's about 12,500 active listings, townhouse condo active listings, and that's down 22%. And then there are about 28,000 adult community active listings, and that's down almost 33%. So the trends are very similar, but you'll see that the levels are of course, slightly different. So this is another interesting point to watch for. Month supply of inventory. We talked about this. This showcases how adult communities are leading the pack at 4.3 months currently. Townhouse condo are next at 7.6 months of supply, and of course single-family homes are hanging out at about 8.8 months of supply. All the figures are down. Single-family down 26.7%, townhouse condo down 35%, adult communities down a whopping 44.2% in terms of the month supply of inventory figure. So this is another really important thing to watch for, as it does a great job of assessing the balance between supply and demand. So this is one of our favorite metrics. At the end, we have a handy little entire market overview. And this is, again, a great way to sort of have a one-page takeaway that will allow you to counsel buyers and sellers or investors or whomever about exactly what's happening in the market. It's a great snapshot of the activity, both for the month of August, or I should say the current month in the current period, and also for the year-to-date period as well. So this is everything. This is single-family, townhouse condo, adult. This is traditional foreclosure and short sale. This is new construction and previously owned. This is all price ranges. It literally is everything. And so this pulls from obviously a very high sample size. There's a great pool of records here. As we can see, there were almost 10,300 sales, and that's a pretty good pool of data from which to pull stats from. So this is a good thing to take to a listing presentation, an open house, or just take it out to the bar if that's your thing. And this is really helpful as you're showcasing market activity. Moving on here, we just want to spend a moment discussing the power of MLS data and why this initiative is so important. MLS data, especially relative to county records or census data or some of the Case-Shiller or the other indices and the other resources floating around out there, the MLS has some of the most accurate data in the industry. It has some of the most timely data in the industry. Just to cite an example here, when Case-Shiller has their release every period, they are reporting that prices were up 10%, as of February, and they're releasing that in August. That's because there's such a lag or a latency with when data is reported versus when data actually occurred. Because these are for transactions that were, or I should say purchase agreements that were entered into 5, 6, 7, 10, sometimes 12 months ago. And so especially in a changing marketplace where we just had a downturn and now we're firmly in recovery mode, things can change on a dime and things can really turn quickly and things evolve daily and monthly really. And so it's really important to keep timely information. This data will be released on the 10th calendar day of the month, and that's literally on data that just closed, on sales and transactions that just transpired 10 days ago instead of 10 months ago. So that's really important to remember. The MLS data is also one of the most rich. It's just resource for housing data, or almost any data really. And this is just in terms of segmentation, of how you can slice and dice the data by area, county, city, zip, school district, you name it, and also by market segment, single family, multifamily, foreclosure, non-foreclosure, short sale, new construction, previously owned, so on and so forth. I want to also talk about the completeness of MLS data and of reporting initiatives such as this one. We do absolutely no sampling. We use a technique that's known as complete enumeration. Just to cite another example, I'll pick on the census a little bit. It is not feasible for the Census Bureau to knock on every single door in every single house in every single city across all of America. So what they do is they take what they deem as a representative sample, and they then make extrapolations about the country as a whole based on this sampling. Obviously, what if certain areas or certain families, do or do not respond to the census? Well, then maybe some certain populations could be oversampled or undersampled, and certain cities or certain neighborhoods can be oversampled or undersampled. And really the glory of the MLS is that there is no transaction that's left out, not a single one, unless it is eliminated deliberately, and we'll talk about that in just a moment. That's very much the exception and not the norm. So it is really a terrific, huge benefit to have data like this, and it's something that other industries and other organizations really covet, and it really is a gold standard. Speaking of gold standards, we do have standardization. If any of you are familiar with RESO, the Real Estate Standards Organization, you will know something about this. The RETS feed is a fairly standardized environment. There are some challenges, of course, as you aggregate up data from 20 or 21 feeds across a state. But the MLS, by and large, across the country, and even internationally for the most part, there are standards that are shared and kept and upheld, and that's a good thing. It makes our lives easier, it should make your lives easier, and it makes initiatives like this one a little more manageable and a little more feasible. QA, quality insurance. I meant quality assurance. This is another key thing to think about. The quality of MLS data is at or near the top. It's absolutely second to none because of the terrific oversight and governance and, of course, the objectivity and the lack of bias in the data. It's just the facts, really. As an agent changes the status of a property from pending to closed, they attach a sold price to that data. And then we can derive how many days on market that home spent, and we aggregate that up to say things about the entire city, the entire county, and the entire state. So the quality of MLS data, combined with its accuracy, its timeliness, its richness, and how the amount of standardization really allows agents and brokers and appraisers and you name it to really harness the power of this data to make better decisions, to better counsel buyers and sellers, to better generate leads and convert prospects into their sales pipeline and things like that. So it really is a good thing. When you combine all the beauty of MLS data with our unique methodology, again, that's where you see a lot of the magic happen. I mentioned briefly that there are some circumstances where we remove certain listings and certain sales. And I want to just spend a couple moments discussing our scrubbing algorithm. We get this question a lot. Excuse me, your numbers do not match the numbers that I just pulled from the MLS. So let me just take a second here. The numbers that agents pull from the MLS or I should say that members pulled from the MLS will rarely match our numbers, and it's because our numbers are technically more accurate because of our data cleansing algorithm. What we do is we have a server and we have this database where we have certain criteria and certain logical parameters where a sale is either included or excluded. 99.7% of the time, it's included. Very rarely do we actually scrub out or cleanse out a record. But for example, these are just two examples. If days on market is outside of that 0 to 900 range, it is scrubbed. If bedroom counts are not between 0 and 20, it is scrubbed. Another example that I didn't include, if the ratio of sales price to list price is more than 200% or less than 50%, then we scrub the price. We do believe that it was a sale, but we do not believe that price is valid. And here's the thing. We're all human. We're mere mortals, and sometimes we had a lot of showings in a day, and we might have fallen asleep on our keyboards, and that's a thing that happens, believe it or not. So we want to have ways to maintain the quality of the data, the integrity of the data, and to make sure that it's meaningful and that it's real data and that strange things aren't happening. Let me just cite a quick example. Agent 123 has a listing. The list price is $300,000, and we see that there's a sales price of $3 million. Well, it's clear that Agent 123, of course, had a few too many showings that day, or maybe has a new child and they're not getting a lot of sleep, and they fell asleep on their keyboard and they entered an extra 0 or 2 or 3. I mean, we've seen it all, trust me. So we want to make sure that that doesn't skew our records and that it doesn't skew our database and of course, the reports by extension. So that's how we sort of manage that. Just a note on deduplication. We deduplicate data in statewide projects such as this NJAR initiative. If a home is cross-listed in multiple MLSs or across classes within an MLS and it closes, we count that as one sale. We have algorithms that are smart. They know what's going on. They see that this is the same listing and it's cross-listed, across MLSs or across classes. So when it closes, instead of double counting it as 2 sales, we know better. We know to count it as 1 sale toward closings and only 1 price toward median and average sales price. So just some notes on methodology here. A couple more. Dates. Data is downloaded from the Red feed on the 8th calendar day. Do be mindful of late entries and late status changes. This leads me to my next point, of course, that speaks to revisions. Our philosophy is as follows. We believe strongly in the fact that data evolves. It's a moving target. Sometimes there are late status changes that are entered. And take, for example, maybe we count that there were 10,000 pending sales in August, when we run reports in September. Well, come October, we rerun August numbers, and we can see that instead of that 10,000, maybe 200 fell through, so it's more like 9,800. Well, here's the question. Would you prefer us to continue telling you yesterday's truth of 10,000 pending sales, or would you prefer a better truth, today's truth, of there were actually 9,800 pendings because of this new information that came to light? Some of those properties were actually removed from pending status, and they were either canceled or they expired, or they returned to active status if a transaction unraveled for any number of reasons. So the only real thing to remember here is that sometimes historical figures will shuffle around just a bit. It's typically maybe 0.5%, never more than 2 or 3%. Probably on average less than 1%. So just be watching for that and be aware that it's not an error. It actually is just it's the most recent truth with the best data as new information comes to light. So I know that's a little technical, but sometimes that drives the media crazy, and it certainly drives some of the members here locally in Minneapolis crazy. But it technically is the best truth that we have with the data that we have available. So we, of course, insist on telling you guys the best truth and the most recent truth. We do firmly believe in that. We do update those historical figures as it becomes available. A quick note on scrubbing and validation. We implement that logic in order to cleanse the data that I mentioned, and this is of course customizable, but we do have some best practices that we recommend to folks. A few more. Hope you're not getting tired of this. My numbers don't match your numbers. We talked about this just a little bit. Let's discuss some possible culprits. Time pull. Think of this as when did you pull the number? What was the date? If it was before we froze the number, then possibly you'll be showing fewer sales or fewer new listings than we're showing if you pulled it after our date on the 8th calendar day. Perhaps you'll be showing more new listings and more pending and closed sales, so on and so forth. So sometimes there's discrepancies with that. Sometimes folks are looking at quarterly data versus monthly data or monthly data versus quarterly data. Remember that the skinny is actually quarterly data, so it won't always match everything else that people pull from the MLS unless you select the quarter. But even then, it's pretty impossible for folks to replicate our processes exactly one-to-one. Geographic filters. Are you looking in a certain area? Could there be bleed out or bleed in? Do you have the same property type filters? Are you looking at everything or just certain segments? Sale type filters, that's similar. Are you deduplicating the data or are you not deduplicating the data? Are you pulling from one feed versus aggregating from many feeds? Like I said, we really do employ a complex methodology that we have revised and really invested a lot of time and money into, and we feel very comfortable and very confident with it. And we think it's one of the best things out there available to anyone, especially in statewide reporting projects like this. So moral of the story is, it is tough to replicate our numbers one-to-one, but you should have confidence and you should rest assured that even though you can't reproduce our numbers one-to-one, our numbers really are the most accurate and the best numbers out there for those reasons. Just a note on current versus original list price and, of course, recent days on market versus cumulative days on market. So if a listing's on the market for 30 days and then it's withdrawn from the market for 10 or 30 days and then it's back on for 30 and then it sells, simple days on market is 30, while the cumulative days on market is, of course, this. Another quick note on was sitting in pending status versus went into pending status. When we talk about a pending sale, we're of course talking about the number of listings that actually entered pending status. It doesn't matter how many were lingering in pending status. We want to know if how many properties had a new contract accepted, a new purchase agreement signed, and that sort of thing. So that's what we care about. Just a couple of notes there. Now we're going to get into perhaps what some of you may see as the more fun part of the presentation. So just how is the market? We get asked this question all the time, both locally, nationally, even by some other counterparts across the globe here. Before we can answer that question of how is the market, we have to have these 5 questions of our own. So how is the market? Well, according to whom, relative to what, for whom, in which segments, and where. Let me just go through some of these really quickly. According to whom? Whose data is it? Who's talking? Who's saying things? Is it NAR? Is it RealtyTrack? Is it Case-Shiller? Is it Trulia? Is it Zillow? Who's talking? Might they have an agenda? Might they be biased? Might they only look at certain segments or certain price points? Things like that. And then, of course, relative to what? Well, how's the market? Compared to what? 2012, 2011, last month, last year, a tax credit, a better economy, 1964. Are you adjusting for inflation and the consumer price index? So on and so forth. I won't bore you any further than that. So how's the market? Well, for whom? It could be terrific for buyers while it's still challenging for sellers, even though that's changing. And it's actually, the pendulum is sort of swinging from favoring buyers, and now we're sort of leaning back toward the middle and perhaps eventually back toward sellers. Certain segments in certain areas are definitely firmly entrenched in sellers markets, while other markets across the state are definitely still considered buyers markets. So that's something else to think about. So how's the market? Well, for whom? For a renter, for a homeowner, for an investor, for a lender, for a real estate investment trust manager, for a hedge fund manager, you name it, all sorts of folks out there. In which segments? Well, things can be fine and dandy in single family, while maybe condo or adult is facing certain challenges not prevalent in the single family segment. Obviously, foreclosure as a segment, as a submarket, experiences some additional challenges that perhaps the traditional segment does not. So you have to look at some of that stuff. Are we talking luxury, high-end versus low-end, new construction versus previously owned? This is also an important thing to watch for. Of course, where? I couldn't give a presentation about real estate without using the three-word mantra of location, location, location. It is perhaps the most important function of home market activity and housing market dynamics and things like that. So, of course, location matters. I have some clever little graphics here that at least help me understand what are we talking about when we say a seller's market, a buyer's market, or a balanced market. And seller's markets are characterized by 5-month supply of inventory or less. That's what the MSI stands for. And in our graphic here, you can sort of understand that there are 8 buyers competing over this one property. So there's a lot of demand but low supply. And I show that here in these bullet points near the bottom. These are some of the trademarks or some of the hallmarks of sellers markets. Low supply, high demand. Sellers are at a comparative advantage. You can expect shorter market times as evidenced by smaller days on market figures. There's typically more robust price appreciation, maybe +5, +7, +10% in terms of median sales price and average sales price. Multiple offer situations are far more common. I know that's something that you guys are seeing now. We're also seeing that here in Minneapolis and across the nation. And typically sales prices tend to be closer to asking prices. So again, that percent of list price received should be 95, 97, maybe 98% soon, and not so much 85 or 90%. Those ratios tend to be higher. Now compare that to a buyer's market with more than 6 months of supply. And this is, of course, a high supply, low demand environment. You can see that there's 6 sellers trying to sell their home, trying to attract a buyer and get an offer or offers on their house. And there's really only 2 buyers that are out there shopping for these 6 homes. So in this sort of environment, this is when sellers have to make concessions. They're finding themselves making price reductions, maybe paying some seller-paid closing costs and things like that, because that's what it takes to sell your home in this market. Now, those who have the luxury of time, may be less likely to do that. But motivated sellers who have taken a job in another city and they've got to move, they've got to sell, this is a thing to watch for, of course. Trademarks of buyer's markets are high supply, low demand. The buyer tends to be at an advantage, longer market times, higher days on market figures. There tends to be slower price appreciation or even price declines. And of course, the buyer has much more price negotiation power and more leverage in that regard. Compare that to a balanced market that's roughly 5 to 6 months of supply. Based on what's happened over the past 6 or 7 years, we've sort of expanded this out to maybe 4 to 7 months of supply instead of 5 to 6. 5 to 6 is a little narrow, so think of this more in terms of 4 to 7. And this is where, you've got about 4 homes on the market, and you've got about 4 buyers looking to buy those properties. So neither side really has a market-wide advantage. There's no clear-cut favorite. Price growth in market times and the ratio of sales price to list prices tend to be, steady and in line with historical averages. So this is kind of a good way to think about how do I interpret this, so what does it mean, and how might I counsel my clients in terms of their expectations and what they need to be doing. Just some practical applications here. 3DM. I apologize, folks. It looks like some of my labels here are getting cut off. I do apologize for that. 3DM. This is a phrase that we coined. Think of it as data-driven decision-making. It is not 3D printing, I swear, even though we do think that's the next coolest thing, besides MLS data, of course. So data-driven decision-making, market timing, when to buy, when to sell, and why. I'll bet there's some of you out there who are saying, darn it, I wish I listened to my stockbroker when he told me to buy shares of Apple in the mid-1980s or the late 80s, and I wish I sold them 2 years ago. Very few people nail the market bottom, and very few people nail the market top. But in general, overall, there is a way to look at the trend, and again, let the trend be your friend, and you can assess the market and when might be a good time to jump in or jump out. And there's some market timing you can do. Market times. This is another way to think about this. Seller patience is a virtue, but of course, motivated sellers need to be priced right right out of the starting gate. They need to be pretty aggressive about that. Way less patient, because the odds are they're getting pretty good offers pretty soon, pretty early on in terms of when they list. So this is another way to leverage the data and interpret the data. We talked briefly about negotiating leverage. Who has it and why? When might the balance shift? You know, for, let's say, since, well, between 2008 and 2011 or 12, you know, buyers were sort of firmly in control. Now, from maybe mid-2012 to late 2012 through today, you know, for the past year or so, sellers have sort of started to regain some of that control. At the very least, it's becoming more balanced. There are definitely certain markets that are still buyers' markets, and there are other areas that are still strong sellers' markets. But as a whole, you know, most counties and the state as a whole is trending back toward a balanced market after we've been in a buyer's market for some time. So again, that's good to see. Pricing strategies. This is something that most of you, I'm sure, are already aware of, but just think about if you price something at $199.9 versus $204.9 or something like that. Be aware of where there's a lot of consumer demand. Maybe buyers are inputting that they want to show, you know, in their search criteria, in their parameters, they're wanting to see, you know, 250 to 300K. So if you're at 304.9, you might miss a lot of eyes that could be on your listing, you know, if you just drop to 299.9. Similarly, maybe folks are trending and consumer behavior is focusing more on higher price points, and that's definitely something that we see happen across the country, locally as well. And we can see that maybe perhaps buyers aren't interested in properties that are priced at $199.9, so maybe that 201.9 does make more sense. So that's another way to think about and leverage the data. Assessing the competition. This is exactly what we discussed with the month supply of inventory in terms of buyers and sellers markets and balance markets. Do we have a saturated submarket, or are we dealing with a low inventory environment where multiple offer situations are very commonplace because there's such strong demand and fairly low supply? So that's another thing to consider as you're working with the data and harnessing the power of the data. I've got just a couple more here. Absorption rates. This is one that we've been honing in on throughout the hour here. Absorption rates can tell you more than you might think. It's not just buyers markets or sellers markets or balance markets, but they can really tell you exactly what is the balance, how have things changed, how does this differ from segment to segment, area to area, this county versus that county, or this city and this county versus the state as a whole. So that's something else to be aware of. Market segmentation. We've also spent some time talking about this. Not all segments are the same. Single family versus condo townhouse versus adult communities, new construction versus previously owned, foreclosure versus traditional homes, so on and so forth. It's really important, folks, to maintain a rational perspective. It's funny, you know, realtors and most folks who are in the industry, they wear a lot of hats. Yes, they're part salesperson, they're part psychologist, they're part market analyst, they're part interior designer, and you know, these you guys wear a lot of hats, and we're sensitive to that. A home purchase is usually the largest financial transaction of a lifetime, and it of course comes with a lot of emotional baggage. So using the data and harnessing the data allows you to bring a rational, neutral, unbiased, objective third-party voice to the table and say, hey, this isn't my number, you know, these aren't my numbers, this is what the association is saying, this is what the MLS is saying, this is what the state, the good folks over at the State Association are saying, you know, and they don't really have a vested interest in telling you anything but the truth. And so as you leverage the data, it's a great way to sort of manage expectations. I'll just say, well, this gets right to my next point. Let me just say this about managing expectations. Sometimes we'll get calls here, I'm sure you have as well. You know, my home's been on the market for 15 or 20 days. Why hasn't it sold? Well, again, look at the data. Look at what the report says. In your area, you know, in your single-family segment, on average, homes are taking 65 days to sell. And so, you know, if you're only at 15 or 20, I think it does take some patience, and that's a way to sort of counter some of that anxiety and some of that emotional component with objective fact and reason, and again, objectivity. And we think that's a really powerful way to use the data. Once we get toward that 60 or 70 days on the market on average that homes are spending, maybe then we can think about a price adjustment or changing the way, or taking new photos, or changing the way that how the property shows and how it's laid out and things like that. So another thing to be mindful of as you're working with the data. Here's a big one, folks. How will this benefit me? So why should I care? Well, we hope that you care a lot because we care a lot. But prospecting, as you're working a room and trying to get leads, and this of course bleeds into my next point about lead generation and lead capture, there's a couple notes here. When you are armed with good data, good high-quality MLS data, that's just 10 days old, so you're talking about things that literally happened a week and a half ago, you sound smarter. You sound more intelligent. You sound like you are a better agent than the competition, the folks who don't use this data, or the realtors instead of the realtors, of course, but they don't have, there's other things going on with that. But this is a great way to, again, leverage the data in terms of your prospecting and lead generation activities. Personal marketing, it's you versus the entire market. Me versus the world, right? How do I market myself? Okay, so in this local market, for townhouse condo properties, on average, prices are $350. Well, my prices are $450 or $750 or whatever. So this is why I'm better equipped and more empowered to help you with this house. Or in the adult community segment for for this area, days on market is an average of 70 days. Well, my days on market for this segment in this area is maybe 32 days. So if you're a motivated seller, I can get your home sold fast, and I have the data to back that up. So it's a great way to sort of personally market yourself and your services and how you fit into the market as a whole. Open houses, listing presentations, this is another great, these are great opportunities, great ways to showcase your skills and your data and how, why maybe it's a good time to make a move or maybe it's a good time to wait to make a move. And also in terms of pricing, why I think we should be priced at this price point or that price point. And again, maybe I think we should come on the market in April or come on the market in March or come on the market in May or July or something like that. Of course, if you're representing a seller, you want to maximize their returns. Of course, if you're representing a buyer, you try to minimize those costs and make strong negotiations and try to sort of bargain that way. Strategic informed decision making. We just spent a while talking about the data-driven decision making and how powerful that can be as you're working to grow your business and to be a better professional. So forecasting and extrapolation and business planning. How might my earnings change in terms of what's happening with prices and sales? Can I grow my business? I'm skipping down to the last bullet point here. Maybe there's a segment that has changed. Either prices have gone up or prices have gone down, and I want to start to break into that area or that segment of the market. And what's the risk-reward sort of dynamic or trade-off there? And you can kind of manage your risk exposure in that way. And also, if you're farming certain areas or determining an ideal segment to work in or break into, be it a geography or a segment that you want to focus on, it's another great opportunity. The data provides a great opportunity to do that. Speaking of farming an area, it's a great way to use and combine stats with prospecting. You're farming an area, you want to have a marketing piece. Hey, prices are up 4% to $320,000. Sales were up 5% to $2,800. What have you. It's a great way to say, I would like you to trust me with your listing, and here's why. Expired listings. This is a very popular way of folks to try to get in on some action. Expired listings, it's a great opportunity to approach the seller and say, listen, things have changed. I have the data to back it up. I really think that within 30 or 60 days, I really believe that you would get a strong offer on this house. And because inventory is low, buyer demand is so high, prices have risen, things like that. It's a great way to use the data. Open house brochures. People love facts. They really do. perhaps someone needs to share that with some of our representatives in Washington. But people really love data and they love facts, as long as it's presented in an intuitive and in an elegant way, which of course these reports are. So they're a great way it's a great thing to integrate into an open house brochure. Also think of networking and social events when you're out in the city or out in your neighborhood. Let's say a block party or a banquet or something, or heck, maybe a bake sale at your kid's school or something like that. Again, it's a great way to say, here's what's happening, here's why I think it's a good time. You know, I would be honored if you would trust me to provide services. Listing presentations. Let's compare the local environment to national, or the local city to that local county to the state as a whole. The data is a great way to provide context to comparable listings as you guys are doing your CMA analysis, or I should say your CMA work. And also, it's a great way to support some of your price and marketing recommendations. Why do I think you should be priced here? Why do I think we should be marketing in this way? Well, because demand is strong in this segment and seller activity is down, and I think that this is a great way to sort of have better visibility and to attract some demand. In terms of property marketing, let's compare price appreciation locally versus the county versus the state. Compare listing prices to the market average and to the competition, of course. This also ties in with some of the financing options and the down payment assistance, and of course any other ideas. These are just, by no means is this an exclusive, I'm sorry, an exhaustive list. There are so many more ways that folks can use the data, and we've seen some very innovative ways. Financing, again, with the buyer side, financing and some of the DPA considerations, price appreciation and local performance. So if buyers are concerned that prices will continue rising and so will interest rates, well, maybe that's an argument for making a move now and really going out and taking a swing at some listings because of what's happening with local price dynamics. This, of course, ties in with making strong offers and negotiating and you know, just how much hardball can we play and things like that. How about marketing yourself? That's an important thing. How do I stack up versus the market? Again, we discussed that, you know, for the whole state or for the whole county, well, maybe homes are spending 72 days on the market or 82 days on the market. But me personally, you know, my listings only spend 35 or 45 or 50 days on the market. So, you know, it's a great way of sort of benchmarking your performance against the city or the county or the state as a whole. You know, also segment by segment and area by area. Highlighting your performance in and your share of, you know, a particular submarket, be it the townhouse condo market in Trenton or the single-family market in New Brunswick or Jersey City or what have you. Wherever it is you work, you have the opportunity to sort of compare yourself to whatever local market you're working in. And with all that excitement, folks, I will wrap up. Thank you so much for joining us today. If you have any questions, please do not hesitate to contact either your association folks or us directly. We are happy to answer any questions. We're, of course, here to support the tools that we provide for you. And I just want to reiterate that we really are excited to be doing this and to work with such a wonderful association. You guys have great folks over at the New Jersey State Association, as well as at all the local MLSs and boards. So it's something that you should be proud of, and we hope that this proves to be a very valuable resource for you as you're out there in the community doing the good work of getting folks into homes and allowing folks to really have better lives. And we appreciate your work. And again, this is your hard work. This is your data. These are your status changes. So we really, really encourage you to leverage the data to grow your business and to get leads and to get listings and to work with buyers and to grow your business and grow your success. And with that, I will wrap up. Thank you so much and have a wonderful day.